Hi, Matt McAleer, Director of Equity Strategies, Cumberland Advisors, August 11th, with John Mousseau, CEO, Director of Fixed Income. We're heading into and probably in some of those dog days of summer, both in baseball and in the markets.
And in the weather.
We're getting belted with weather that won't break down here in Sarasota. In terms of markets, we'll jump over to John in a moment. Equity markets, what did we see this week? More of the same. And that was a little better bid to value than growth. Remember, that started to change about 6 weeks ago.
Right.
Growth had a torrid run led by technology till early July into mid-July, just started to peter out a little bit. What's working in our portfolios? U.S. ETF portfolio. Energy, tremendous bid, really trading well. Healthcare, trading well. Remember, healthcare couldn't get out of its own way for the first 5-6 months of the year, now starting to trade well. We're waiting to see if biotech can get any of that updraft from healthcare. In terms of some areas that we need a little bit of help with in our U.S. Equity portfolio, we'd like to see a little bit of bid on the flip side of energy, and that's in the solar area.
Right.
Solar, a lot of pressure on it right now. Not a large position in the portfolio, but pressure nonetheless. In our tactical portfolio, a little bit of similar action. Energy ripping.
Right.
Healthcare trading well, especially pharmaceuticals. We have a nice position in pharmaceuticals led by Lilly. That has been rock solid. Berkshire Hathaway had a nice run off some numbers a week ago. Some of the areas that we need some help in. A little disappointed in the drawdown percentage of Microsoft. Would have liked to see it get a little stickier there. Adobe, the same. Listen, they were up 30 and 40% coming into August. Certainly some time to get their feet back under them is warranted. Over on the international side, there was some pressure this week. Maybe not headline pressure or any gapping, but just as we talked about Asia showing some strength last week, it kind of reversed this week, led by China.
Right.
As far as China goes, the emerging markets go. Europe held in. Latin America, a little punchy, but again, no complaints off the rip in Mexico and Brazil so far this year. So that's a quick synopsis of where we're positioned. Where would I like to add some allocation? I feel we're a little light in industrials. So I have a few things circled, seeing if they pull back, come to me a little bit more. It pays to be patient in these markets. We are dealing with a little bit of upward pressure in rates. We're dealing with a little higher energy cost. Does that create some volatility to get a reasonable level in some areas that I'd like to bulk up on? I think so. Broader speaking, I'd like maybe a little more dose of mid-cap in some of our portfolios. We'll see if that comes to us. Moose, how about in fixed income? That's getting all the headlines.
Yeah, and it's really a tale of two markets this week. In the Treasury side, we saw the 10-year bond yield drift up from about a 405 level to about a 416 by the end of the week, so a drift up. Not very different from where it was last week after the Fitch downgraded the U.S., and of course yields came down a little bit last Friday, so kind of mixed that way. What we did have was an inflation number that was good this week. Came in for the monthly number at 0.2, right on where expectations were. More importantly is the fact that even though the year-over-year number might have blipped up a little bit because you replaced a 0 from a year ago with a 0.2 from this July, so it caused it to go up. The important number, and we have a graph up here, is the 3-month annualized inflation number, which is basically take the last 3 months, multiply them together, put it to the fourth power, and there you have an annualized CPI for three months. And that is at 2%. Does it stay there? We don't know. But as you can tell from the graph, the grind down, and we have talked about this time and time again, the grind down in inflation continues. We don't know whether it stays, but when you look at some of the anecdotal evidence this week, it would suggest the slowdown is going to come. You're seeing some increase in auto loan delinquencies. You saw this week some of the banks get downgraded on their debt. Why? Because of the big overhang that they have in commercial real estate. That's another number that, if you look down, take a periscope, look around the corner, could be an issue for the economy. So this is all reverting back to normal. The reason that I said the tale of two markets, Treasury yields higher by, 10 basis points, 13 basis points, etc. Muni yields lower by 6 or 7 basis points across the curve.
Good demand.
Good demand. And the one thing that's encouraging now from a year ago is that a year ago when you have a drift up in Treasury rates, you were getting murdered in bond fund liquidations.
Right.
Just the opposite now. Not that they're getting totally inflows, but they are getting inflows. So you are seeing big demand for cheap municipal bond deals with 4 handles on their yield. And we think that continues because people are smelling the fact that a good taxable equivalent yield in that 6 3/4 to 7.5 range is a nice alternative to equities in some cases.
Absolutely. And keep in mind what the fixed income portion of the portfolio does. We like to take any benefit we can over inflation.
Right.
So if you're talking about a 3-month run rate of 2, let's say it's 3. Let's use some of the headline numbers of 3.5, 4. If you're still looking at an after-tax of a 6.5, 7,
taxable equivalent, yes.
Yeah, taxable equivalent. That bond is doing its job.
Right.
Now, in terms of how we structure our barbell with some short to take advantage of these beautiful short-term rates,
Right.
and further out where we get some areas of dislocation and we can take advantage of, that's what we do day to day.
Yeah, it's a great time to have a barbell portfolio because short rates are high and long rates are high.
You got it.
Stay out of the middle.
Well, it was an interesting week. As always, next week will be just as interesting. Listen, we were thrilled to see our subscribers approaching 1,000. Don't forget to like and subscribe. It means a lot to us. Enjoy the weekend. We'll see you next Friday.